investors, this video is a part of our 2 minutes concept video series. And in this video, we are going to discuss about the concept of repo rate and how it is linked to the inflation and economic growth, and also if there is any optimum level for the repo rate. What is repo rate? Banks require to keep a portion of their deposits as cash with the RBI. When banks fall short of cash to deposit with the RBI, they borrow from the RBI by pledging government securities. The repo rate is the rate at which the RBI lends money to banks. It is an instrument of monetary policy and functions as a key policy interest rate. How is repo rate linked to inflation and economic growth management? When RBI raises the repo rate, they want to make cost of funds more expensive for banks. Higher cost of funds for banks leads to lending to the economy becoming costlier, and this reduces demand for loans that in turn leads to lower demand for goods and services. Lower demand for goods and services results in lack of pricing power for producers of goods and services that in turn leads to inflation in the economy coming off. When RBI lowers the repo rate, they want to make cost of funds cheaper for banks. Lower cost of funds for banks leads to lending to the economy becoming cheaper, and this increases demand for loans that in turn leads to higher demand for goods and services. Higher demand for goods and services results in increase in economic activity, leading to higher economic growth. Inflation expectations also rise when demand increases in the economy, as producers of goods and services have higher pricing power. Is there an optimum repo rate level where there is both economic growth and low inflation expectations? Every central bank strives to strike a balance between economic growth and inflation, even though many of them have only one mandate of price stability. RBI is no exception, and it strives to find the right level of repo rate that promotes growth in the economy and also keeps inflation expectations stable. Repo rate management is a dynamic process and keeps changing according to the economic environment. In the globalized world, RBI not only has to factor in domestic macroeconomic environment but also global macroeconomic environment as it strives to find the right level for the repo rate. RBI uses the repo rate not only to strike the right balance between growth and inflation but also to contain volatility in the Indian rupee that is affected by global macroeconomic factors. Please do visit investorsareidiots.com to subscribe to Zephyr online investment advisory services and secure your financial future. Do like the video if you find it useful, and don't forget to share it and comment below to give us your valuable feedback, or if you have any query on the financial markets. Download our mobile app for Android and iOS devices to remain up to date all the time. We are also available on Facebook, Twitter and Instagram. Do follow us there as well. And also our Twitter handle @RightMF to get advice on mutual fund investments. Thank you for watching the video.